reset for our 250K portfolio live trading from a portfolio 53 to a portfolio 50. I have 4 reasons why we're going to do that, and we're going to discuss that. The first reason is the dead VIX environment. These are a list of 4 reasons right here. The dead VIX environment that we're experiencing. I'm going to go over that. First, let's preview the research that we're working towards, so you'll understand what we're talking about. This 12,123 total profit over drawdown is the highest I've seen in a while with the current setup. I'm going to go over the rationale of the new portfolio, what we changed. It's not optimized. It's switching out a few systems, and that makes sense. And so let's go over this dead VIX environment. So we've made a video about this last week, looking at the average, the highest high, the lowest low, the last 35 days is 2.77 still, lowest level since 2017. I've also looked at this on a weekly basis, and if we go back on a weekly basis, we can adjust this to maybe 8 weeks. You can certainly see the highest high minus the lowest low of the last 35 weeks, how quickly this has dropped. This really dropped quickly when you look at that window. This is a 35-week basis. So we're going to go back to an 8-week basis. This level still goes back to prior to 2018. In 2018, it surged above that level, and then you've seen similar drops, but this is the lowest level that's been since 2017. Let's look at this indicator and change this value to 8 weeks instead of 35 days since we're on weekly charts. This is the indicator that we're using. We used a hard value of 2.77 for reference on the dailies, and you still see 2.77 is still that number. You can see sometimes it's easier to see on a weekly basis what it's done, not having to process as many days, but it has not been at this level since, again, March of 2017. So even at the end of 2017, this was creeping higher than it is now. And so you see this probably back in 2014. It was at similar levels, but not quite at that level in 2014. Going back even further, you see, 2006. It's at those levels in 2006. You see 2.74, 12.1, 2006. All the commodity markets have gone electronic since 2006. Stock indexes went electronic prior to that, and around 2001 and 1997 they had the E-minis come out. 2001 they started mostly going electronic, and then the commodity market started going electronic in 2007. Between 2007 and 2009 also we had QE that started in 2009, and so those caused regime changes. So if you take those into consideration, since 2009, we're at this one time in 2017 where it's at these levels in early 2017, and so trying to predict when that will stop is tricky. It could bounce a little bit, but there's no guarantee that volatility is going to expand and give us some of the ranges that we've seen the last few years, and so we have to trade accordingly in this dead VIX environment. We try to anticipate changes and cycles based on quick drops and then bounces, but you can see back here sometimes this thing drops and stays steady state for a while, and we don't want to just keep trying to trade momentum and then get slammed in a low VIX environment, trying to trade momentum that's not there. So the dead VIX environment is the number one reason why we want to adjust and reset this portfolio. The second reason is we had a worst case drawdown on our current portfolio. I want to discuss that a minute. Here's our current portfolio that we wanted to trade starting in. We released this on December the 12th, and we waited for a drawdown to start trading it, and went down into this drawdown. We started trading it in this drawdown level back in here, and then it went through a worst case drawdown. Then it bounced up to here, and on Friday it pulled back to here, and so there's a let's see, the exact date that we started trading this is around the 21st. Trying to figure out which data in the drawdown lines up with 21st, but somewhere in here we started trading it on the drawdown. It bounced, and so we have, whenever you get a worst case drawdown, you look for a bounce, but it may not always bounce back. We're seeing worst case drawdowns bounce a little bit and then roll over again. So once it's had a worst case drawdown, You look for the bounce, and then if you can get out on the bounce, we're up plus 1K on the month on a 250K portfolio. So that's pretty much around break even, almost 0.5%, but still break even for the type of trading we do. But you want to protect against this degradation. You know, it's uncomfortable to sit here and say, well, made a worst case drawdown. Let's hope it just keeps going up now and doesn't come back down. And so once it does that, you know, you could see this. You could continue to see this. We see that in some of our other portfolios that we've transitioned away from. And when you're in a market where the VIX collapses, you have to transition and adjust. And that's part of regular trading, is adjusting to the newest environments. And we've seen more shifts in volatility, more shifts in intraday market environments lately than we're used to seeing. So this worst case drawdown is something to be cautious of, to protect against, especially after you had the opportunity to bounce quickly and get out up a little beyond break even. So the worst case drawdown and the dead in VIX environment will be covered, the 1 and 2. Number 3, we're out of sync with the hypotheticals. So we've had more signal differences, and that really threw us off. My research computer shows different signals than the live trading computer. And so we're trading live, and then we get different results on different computers based on different data. And so we're out of sync with that more than I've seen in a long time. And so I want to do this reset and wait for another drawdown on a new portfolio. And so that's the third reason. And the fourth reason is one I'm most excited about, is the new research. I gave you a preview of that. We're going to go over that now, the new research. And this gives us the final reason for the reset. The first three are discouraging. You have dead VIX environment, you have a worst case drawdown, you're out of sync with your hypotheticals, and so it's kind of a discouraging scenario. And then you spend some time researching, and database research always provides the optimism in your trading. And so, you know, we get the bounce, we're up a little higher than break even. Now we have new research to look at, and we're optimistic about that. So here is the preview that I talked about at the beginning of the video. Is you reduce that worst case drawdown from 31 to 23. Very risk averse in our trading. Futures trading can be very risky. You have to have a way to manage that risk, and this is how we're doing that. We work with portfolios. We start in drawdowns, and then we exit on bounces after when we get a chance, and then readjust the portfolio. And it's a very active approach to algorithmic trading. This number 12123 is very high. We're not changing any of the gold, silver, crude oil, or natural gas strategies. Those remain the same. The only changes that we're making are removing 5 ES strategies, 1 NASDAQ strategy, and then we're adding 3 existing strategies, 1 ES and 2 NQ. And adaptive moving average is really one of the strategies that can really lose a lot of money. It was down several trades. It was 1, 2, 3, 4. It went 1 for 5 on Friday. I just don't want to trade a strategy like this in this kind of a VIX environment. Just too many reversals, too many trades in one day, and trading with the trend and reversing throughout the day in this type of environment isn't a very good approach right now until the VIX is re-energized, until those ranges are re-energized. This is a good strategy overall. This is not a terrible drawdown. 110 at the high, 120 up here. It's only about a $10,000 drawdown, but just the steady state length of the drawdown ever since July certainly shows traces of the VIX starting to contract greatly the second half of this year, second half of 2023, and continues on in 2024. And so instead of predicting that the VIX will all of a sudden become re-energized because it's lower than it's been in a while, is not the best approach. We'll just wait for it and trade strategies that are doing well in this type of market environment. Tick wave is another strategy that's momentum based. Tick reversal needs more range and directional trend as well. It can be a lot like adaptive moving average. Tick count trend 2, low average trade profit. Tick chop out of sync. Momentum fader. It's okay. We may add it back. And then we're adding another Cobra CT3. We're adding EVP1, which is in a steep drawdown, but is bouncing back and works in this could potentially work in this market environment based on the way based on its risk management. And then VSD divergence has done well in this market environment. Decent equity curve, like the concept of divergences in this type of market environment. And so we continue to research. We have a long list of things to research still, and constantly trying to incorporate that into our portfolios and portfolio updates. And so the portfolio calculator has been updated through Friday, and you can see the latest results. I've moved a long list of strategies under the old portfolio list, and you can see, for example, our stock index portfolio E-mini 34, and we were trading this through September of last year, and it went through that worst case drawdown, and it had some bounces and rolled over. It had a lot of momentum strategies. Definitely not working in a this type of VIX environment. You can see here we want to protect against this. And so you have a portfolio that's worked well, and then in this time frame, and then it rolls over and you get some bounces, but you continue to see the rollover. So we adjust for a dead VIX environment, and we are trading this setup right here, stock 250K portfolio beta, released on January the 14th for our managed account, 250K portfolio, 12,123 total profit over drawdown. Once it hits a 10K drawdown intraday, it's hard to sync up intraday, but we'll be working on that. Intraday syncing up of this setup so that we can capture this on a drawdown and look for it to go back into its cycle, working to get in more out of sample results. It's been profitable since August, but slightly profitable, and so we're trying to get more of these out of sample results that we're seeing in our research, and we're continuing to experience. What we've experienced is we adjust the portfolio, and then the VIX drops lower, and it's harder to trade, and so we're not getting the same out of sample. We're risk averse, and we're still going to take that approach, and we're still optimistic about eventually capturing some out of sample performance and getting one of these, some of these years that we've seen here in the past. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.